Welcome to The Explainer. We're about to dig into a really fascinating economic analysis, one that tries to put an actual number on one of the biggest political and economic shifts of our time. So the big question on everyone's mind, right? A decade after the UK left the EU, what was the actual price tag? We're not talking politics here. We're going to unpack almost 10 years of hard data from a huge economic investigation to see what the numbers really tell us. All right, first up, a decade on. Now, to get this right, you got to understand that Brexit wasn't just a switch that got flipped one day. Nope, it was a long, drawn-out process, and that created years of economic uncertainty. You can see it right here. It all kicked off with the vote back in 2016, but the real economic story? Well, that unfolded over all those years of talks, negotiations, and constantly shifting deadlines. And this is the key takeaway. That prolonged uncertainty is absolutely crucial because it had this slow, gradual building effect on the whole UK economy. Okay, on to Section 2, the doppelganger economy. This is where it gets really clever. I mean, how on earth do you measure the cost of something that, well, didn't happen? To figure out what the UK's economy would look like if it had never left the EU, researchers got creative. They built a kind of economic twin. So they used this pretty sophisticated technique called the synthetic control method. And here's the gist of it. They took a whole bunch of economic data from 33 other similar countries and mashed it all together to create a virtual UK, a UK that, in this simulation, never went through Brexit. This doppelganger is basically the control group in a giant experiment, giving us a perfect baseline to see how the real UK has performed. And boom, here's the result. Just look at this chart. It's tracking GDP per person. The blue line? That's the real UK. The red line is its virtual twin. See how they're practically stuck together before 2016? It's incredible. But then, right after the vote, that blue line just peels away. It starts falling behind its double. And that gap, that growing space between the lines, that's the estimated cost of Brexit to economic growth. But wait, it gets even more dramatic when you look at business investment, which is, a huge driver of future growth. This chart tells a really stark story. Investment in the real UK. It didn't just dip a little after 2016. It pretty much flatlined and then just fell off a cliff compared to its doppelganger. We're talking about a massive shortfall here. And that brings us to this staggering number, 18%. This big picture view, this doppelganger analysis, suggests that by 2025, business investment was down a whopping 18% from where it would have been without Brexit. That is a massive, massive hit. All right, let's move on. Section 3, inside the firm. So that doppelganger view gives us the big picture, right? The 30,000-foot view. But to really be sure about these findings, the investigators had to zoom in. They drilled all the way down to the micro level, looking at how individual companies were actually affected. And to do this, they used a classic economic tool called a difference in differences approach. It sounds complicated, but the idea is simple. They compared two groups, UK firms that were super connected to the EU before 2016 and firms that really weren't. The logic here is pretty straightforward. If Brexit was really the cause of the problem, you'd expect the firms with high exposure to get hit way harder. And they didn't just look at one thing. This wasn't some simple back-of-the-envelope calculation. The analysis was incredibly detailed. They used 6 different ways to measure a firm's connection to the EU. Everything from exports and imports to EU workers, all the way down to who was sitting on the board of directors. A really comprehensive picture. Okay, Section 4, the 4 channels. So at this point, we've seen a pretty consistent negative impact, right? From the big picture view and from looking at individual firms. But the big question is, why? Why did this happen? Well, the investigation identified 4 key reasons, 4 channels that were causing this economic drag. So here they are. And what's interesting is that it wasn't just about new trade barriers, which is what you might expect. It was about something deeper. The corrosive, grinding effect of long-term uncertainty, fears about what future sales would look like, and just a massive diversion of company resources and brain power. So let's take that first channel, uncertainty. I mean, just look at this chart. This is the Brexit Uncertainty Index. And wow, see that massive, sustained spike right after the 2016 vote? This wasn't some quick shock that came and went. This was a thick cloud of uncertainty that just hung over the economy for almost 5 years, and it basically paralyzed business investment.
And this next point really brings home that third channel, the productivity drain. Get this. On average, nearly 1 in 10 chief financial officers were spending 6 hours or more per week just preparing for Brexit. Just think about that. That's almost a full workday every single week for top executives, not spent on innovation or strategy or growth, but on Brexit prep. That's an enormous diversion of talent.
Okay, so let's get to the bottom line. Section 5, the final tally. We've looked at the economy from the top down and from the bottom up. So what's the final number? Let's put it all together. And this table really lays it all out. What's so striking here is how consistent the findings are. Now, the numbers from the two methods, the doppelganger versus the inside the firm approach, they aren't identical. You can see the macro estimates are a little bit bigger. But look, they both point in the exact same negative direction for everything: GDP, investment, and employment. So, when you average out these two really solid methods, the conclusion is pretty stark. The analysis finds that by 2025, the whole process of leaving the EU had shrunk the UK economy by somewhere between 6 and 8%. That's 6 to 8% smaller than it would have been if things had just stayed the same. So, this deep dive puts a pretty clear number on the economic cost for the UK, but it's also bigger than that. It's really a powerful case study for the whole world, and it leaves us with a really important question for the future. In an era where global trade is facing all kinds of new challenges, what's the real economic price of unwinding these deep international connections?